For thousands of years, gold and silver have stood as timeless symbols of wealth, resilience, and stability. Their intrinsic value has weathered countless global upheavals, wars, depressions, pandemics, and economic collapses, outlasting paper currencies and volatile financial markets.
Today, as the U.S. dollar faces unprecedented challenges and the global financial system undergoes dramatic shifts, these precious metals are once again taking center stage. This script explores the enduring significance of gold and silver, the decline of the U.S.
dollar, and the urgent need for individuals to secure their wealth by embracing these historical forms of wealth. Unlike traditional investments, gold and silver are not merely assets that fluctuate with market trends. They represent enduring wealth that transcends financial turmoil. Throughout history, these metals have acted as safe havens during times of crisis. Gold and silver have survived economic catastrophes such as hyperinflation in Weimar Germany, the Great Depression, and world wars. While fiat currencies have come and gone, these metals have remained steadfast. Central banks and influential private traders are accumulating vast quantities of gold and silver. This isn't speculation, it's a calculated strategy to hedge against the uncertainties of fiat currencies and the shifting global economic landscape. The purchasing patterns of major players, be they central banks or private institutions like JP Morgan, which holds a staggering 45 million ounces of gold and 1.2 billion ounces of silver, indicate a collective acknowledgement of these metals' unparalleled value. Gold and silver are more than commodities, they are insurance against financial instability and the inevitable cycles of economic change. The dominance of the US dollar has been a cornerstone of the global economy since World War II. However, its reign as the world's reserve currency is nearing its end. Since abandoning the gold standard in 1971, the US dollar has operated as a fiat currency, relying solely on trust and government backing. This experiment is now facing mounting pressure as global confidence in the dollar wanes. Reserve currencies typically dominate for about a century. The US dollar, having been the global reserve since the mid-20th century, is nearing the end of its cycle. Nations like China, Russia, Saudi Arabia, and India are diversifying away from the dollar. They are not only accumulating gold, but also exploring alternative systems of trade and payment that sideline the dollar. The dollar's decline is not just a possibility, it's a trajectory already underway. Its waning global influence underscores the need for individuals to reassess their financial strategies. The extraordinary withdrawals of gold and silver from major exchanges such as COMEX and the London Metals Exchange are further evidence of the global pivot towards tangible assets. The London Metals Exchange is witnessing its lowest silver supply since record-keeping began. Similarly, COMEX has seen unprecedented gold withdrawals, including a staggering 26 million ounces in a single day. When metals are withdrawn from these exchanges, they lose their liquidity, indicating a deliberate intent to hold these assets for the long term. This underscores the belief that physical metals are more reliable than financial instruments in volatile times. The challenges faced by individuals in accessing their funds for large purchases, such as a client's reported 5-day struggle to withdraw $50 million, highlight systemic vulnerabilities in traditional banking systems. Such instances emphasize the need to diversify wealth into tangible assets like gold and silver. These withdrawals are not isolated incidents, but part of a larger trend of accumulation and preparation for a changing financial reality. Central banks worldwide are making unprecedented moves in their accumulation of gold, signaling a seismic shift in global economic priorities. In Q3 2022 alone, central banks purchased 399 tons of gold, representing a 340% increase from the previous year. This marked the highest quarterly purchase on record, nearly double the previous record in 2018. Bloomberg has identified mystery buyers, likely BRICS nations Brazil, Russia, India, China, and South Africa. These nations are collectively challenging the dollar-centric economic order by amassing gold reserves. The classification of gold as a Tier 1 reserve asset by the Bank for International Settlements (BIS) further cements its importance in the evolving financial system. This surge in central bank purchases highlights the diminishing appeal of the dollar and the growing role of gold in shaping a new global economic order. The BRICS nations and other emerging powers are coalescing to challenge Western dominance in the dollar-based system. These nations are not only stockpiling gold, but also establishing alternative financial systems, such as bilateral trade agreements and digital currencies to reduce reliance on the dollar. China and Russia are collaborating on energy infrastructure, while Saudi Arabia and other OPEC nations are exploring non-dollar oil trade. Such moves threaten the dollar's role in global transactions. Should OPEC and Saudi Arabia abandon the dollar for oil transactions, the repercussions could be catastrophic for the U.S. economy. The influx of dollars back into the domestic economy could trigger hyperinflation and erode purchasing power. The realignment is not just economic, but geopolitical, as emerging nations seek to redefine global power structures. For individuals, the dollar's decline poses significant risks. Reliance on a single depreciating currency could lead to financial ruin. As the dollar loses its global status, its value will plummet, leading to inflation or even hyperinflation. The Federal Reserve may be forced to raise interest rates to curb inflation, further straining the economy. Recent reports of difficulties in withdrawing large sums of money from banks highlight the risks of holding wealth exclusively in cash. Systemic barriers could prevent individuals from accessing their funds when they need them most. Diversifying into tangible assets like gold and silver offers a hedge against these risks and ensures financial security in an uncertain future. Gold and silver are not speculative assets, but time-tested stores of value. These metals have maintained their value for millennia, outlasting every paper currency and economic system. Major institutions like JP Morgan are amassing record quantities of gold and silver. This reflects their confidence in these metals' enduring value, even as they manipulate markets for short-term gains. Gold and silver are universally recognized as valuable, making them practical tools for preserving wealth across borders and generations. While they may perform like investments in certain market conditions, their true value lies in their ability to preserve wealth. The global financial landscape is shifting rapidly, and the window to act is narrowing. Individuals should move to protect their wealth by acquiring physical gold and silver. These metals offer a hedge against the financial instability that accompanies the dollar's decline. Holding wealth in multiple forms, precious metals, real estate, and other tangible assets reduces risk and enhances financial resilience. The transition to a new global economic order is inevitable. Those who prepare now will be better positioned to navigate the challenges ahead. The writing is on the wall. The US dollar's dominance is waning, and the global economy is undergoing a fundamental realignment. In this context, gold and silver emerge not just as financial instruments, but as lifelines, 5,000-year-old wealth that offers stability and security in an unpredictable world. For individuals, the urgency to act cannot be overstated. Accumulating gold and silver today is not just a financial strategy, but a necessary step to safeguard one's future. As central banks, institutional investors, and nations pivot to tangible assets, the time for individuals to follow suit is now. The era of relying solely on the dollar is ending. Those who recognize this reality and adapt will thrive in the new economic order.